Hi, everyone. Jim Gossert and John Richardson here again from Republicans Overseas, and for another tax talk. Um, John, some really interesting news it came in from, I think it was last Friday, reported in the Financial Times. And I tell you, I got to give a shout out to the Financial Times. This is not the first time they've reported something on the situation of Americans abroad as it relates to taxes. And as far as you and I can tell, we chatted about this. They're the only ones that reported this. But December 17, and the title of the article is "U.S. Bill Threatens Double Taxation for American Expats in UK." Well, okay, I took a little exception to that. U.S. bill threatens double taxation. We're double taxed anyway. But
That's right. That's
we're
right.
double taxed anyway. But John, why don't you lead this off? Because to me and to you, I know, this really underscores the importance of pure RBT as the only solution that's going to be comprehensive, that for all of the tax ills that face Americans abroad. You can't sort of fiddle around the edges. But what's summarized in this article really underscores that you just got to get rid of CBT. That anything short of that is going to leave overseas Americans vulnerable. But why don't you, if you would, pick it up from there, please?
Well, first of all, I've got to say that I agree with you 100%. Okay, because what this article demonstrates, among other things, in addition to other examples we can talk about, is how completely unintentionally, as long as Americans abroad are subject to the U.S. tax system, some seemingly neutral, almost irrelevant proposed change to the tax code can just wreak havoc in their lives. I mean,
And for those that haven't read it, what is that change that's in here? What's the change that's being talked about?
Well, as far as I can tell, it was a great article. And, like you, I really appreciate the coverage. It didn't specifically say what the change was, but what I infer from all the information, plus I did a little bit of poking around after reading it, is that, as you know, the U.S. Has provisions to give tax credits for foreign taxes paid, right? So in other words, if you owe $100 of U.S. tax on income earned in, say, London, since the article comes out of London, and you paid, say, $30 of tax on that in the UK, and you owed $30 of tax on that in the US, you could effectively pay the $30 of tax owed in the US by using the tax paid in the UK. That's what a tax credit is. It doesn't mean, contrary to the way a lot of people talk about this, that it's not tax. It doesn't mean that at all. It means that the way you pay a US tax owing is by using the tax paid in the UK to offset or a credit. And this is actually something that's very advantageous to Americans abroad. And it's why, by the way, most Americans abroad, if they're well advised, would prefer to use foreign tax credits instead of the foreign earned income exclusion. Because by using the foreign tax credit rules, what's interesting about it is, let's take an example of, say, $30 of tax owing in the US, but $40 of tax owing in the UK. Well, that extra $10 of tax that you paid in the UK actually is sort of put into a box or a little bucket, if you will, to be used later if you need it as a tax credit, from that year, but you can use it in other years. And there's two ways you can use it in other years. One would be going forward for 10 years, and the other would be going back for 1 year.
Okay.
Now, obviously, this stuff can be complicated and you can't know in advance necessarily, what might work for you. But, for people who are thinking this doesn't matter, let me just give you one real practical example where it does matter or has mattered. One is on the sale of a principal residence. As all Americans abroad know, that is taxed by the US government, but not taxed in, say, the UK or Canada. Well, if it's taxed in the US, it's a passive income inclusion. But if, for example, you were filing your tax returns and you build up a big bucket, if you will, of excess foreign tax credits on passive income, well, you could carry all that with your accumulation forward for 10 years and use that to offset that US tax, right? On the sale of your principal residence. So this stuff can really matter. Or another area where it mattered was, in that 2017 transition tax, right? Where a lot of people were hit with this US income inclusion. Well, if they had foreign tax credits that they'd been accumulating over the 10 years, then many of them were able to use those previous foreign tax credits to offset, right, that transition tax, if that makes some sense to you. So, this is stuff that can be really valuable. Another point I would make for not using the foreign earned income exclusion, but the foreign tax would be, notice I said that the tax credit works as a credit, but if you have the income, then that opens up the door to, participating in IRAs in the US and things like that, right? Where if you excluded the income under the foreign earned income exclusion, well, you'd have nothing to use as the basis for that. Now, here's what happened, okay?
Okay.
So basically, as part of the Build Back Better Act, apparently, okay, I didn't dig into this to find the exact provision myself, but I found a couple articles online. Apparently, what they did was they said, you know what? When it comes to these foreign tax credit carry forwards and carrybacks, we're going to get rid of the carryback. In other words, you can no longer carry something back a year. Well, now that's kind of interesting because, well, it does prevent, something that could be useful generally. But the thrust of the article was that because of a mismatch in the tax years, the U.S. uses a calendar year and Britain uses a year, I think, what was it, April 6th?
January, well, the article said January 31st.
Which, by the way, is totally normal, okay, in other countries pick their tax year. That basically it would sort of deprive Americans in the UK of the opportunity to use taxes paid in, say, 2022 to offset taxes in 2021. So that's basically.
And it has to be taxes paid, not taxes incurred or owed. So in the UK, in order to get that tax credit, you would have, once that, if that year back adjustment goes away, you'd have to pay the tax owed in the UK by December 31.
That's exactly right. That is exactly right.
Calculate it properly and know what's owed.
Exactly.
Okay. And otherwise, an American in the UK operating under the UK calendar, they do their taxes, get it done by January 1st, January 31st, and whatever, if there's an offset or something that doesn't tie out with their US tax return, well, they can square it up. They can just square it up after the fact.
Yeah,
you have 1 year to look back, and what's in the Build Back Better bill is taking away that ability to look back a year.
Exactly. Not the end of the world, but what it does mean is that people need to now pay a lot more attention to U.S. tax, and it sort of, it really underscores that, for Americans living in the UK, I mean, they've got to understand that the U.S. tax system is their primary tax system, right? And everything else, kind of has to, fall in line around that.
Sure.
So, this is exactly the problem. And this is why it is really, really a bad idea and frankly, borderline ridiculous to imagine that this problem can be fixed if any form of citizenship-based taxation remains, because people will always be subject, to this, oh my God, look what happened.
Always going to be exposed to something like this, ending up buried. Who knows how this was found, but this was in the middle of a multi-thousand page bill, which I guess
in plain sight.
Yes, in plain sight, page 1,378 out of 4,000, whatever it was. And I guess for now, at least, it seems like the news over the weekend is that Build Back Better bill is now permanently on hold. So the immediacy of this, but the point is, like you're saying, the only way to deal with this is get rid of CBT and go to what you've dubbed pure RBT, isn't it?
That is
something else that struck me as I read this, most of my career overseas was in Asia. And I'm going from memory, but I'm quite sure, John, that Hong Kong personal taxes are due on March 31. And in Japan, for example, my experience in Japan has been that every year, financial year, whether it's corporate or otherwise, government, uh, that it's April 1 to March 31. I would be surprised if personal taxes are any different, but it might be. I don't know that for a fact. But the FT article makes this sound as if it's an issue specific to the UK. But John, in fact, isn't this something that would apply to any country that uses anything other than calendar year for their personal income tax calendar?
Absolutely, yes. No question about it. So Australia would be a country. I'm pretty sure New Zealand is. I'm not, not positive, but I mean, there's a wide range of tax years around the globe.
Yeah.
And this opens up the door. I mean, it makes it more uncomfortable, right? It makes it more uncomfortable for Americans abroad. Totally unintended in the sense that nobody was even thinking about it. Obviously, just intended to, be some sort of a revenue offset. I'm sure that's where you'll find in the Build Back Better thing.
It probably is. Well, yeah, I mean, it's probably is a little bit of a revenue offset, isn't it? And done well. There's a quote in the article that said there's a speculation by one of the people quoted saying this was probably done for administrative convenience.
No,
Who
no,
knows? Who
no.
knows?
It was not done for administrative
I
convenience.
rather doubt that.
It was done to create more tax revenue because
And
obviously if people can't carry, the credits back for a year, they have to pay more US tax. Clearly, that's the reason.
what
I mean,
struck me was the quote they quoted a couple of tax professionals in here, and there's a quote that they highlight in a box in the article that references that it seems to imply that this is basically the UK's fault because the UK uses January 31. And the quote reads as follows. I won't quote the individual, but it says, the UK has this totally insane to the rest of the world tax year. And that does create issues for Americans over here. Well, wait a minute. Uh, one would think that the UK should be able to have their tax calendar as it works for the UK. Yet the implication here is that it's the UK's fault that Americans are inconvenienced like this because they have a unique tax calendar. John, that makes no sense at all. I mean,
well,
why does the world need to revolve around the
I
IRS
don't
tax
remember
code?
that quote from the article, but I bet my last dollar that quote came from some US lawyer practicing in London or something. I mean, nobody else could come up with anything as frankly, one-sided and ill-advised as a comment. But it reminds me a little bit of, the Ann Secoulas case, this American woman who, had the accident with Harry Dunn, the British teenager.
Yeah,
Basically,
yes.
wasn't used to driving on the left side of the road, and regrettably, Harry Dunn paid for that with his life. But I remember some people in the U.S. talking about, well, people drive on the wrong side of the road in the UK.
Yeah.
I mean, good God, it is their country. They can set how you drive, what the tax year is. I mean, this is like American arrogance at its worst.
Well, this is Washington, D.C. centric, which makes it an order of magnitude tougher. More egregious.
It's not the end of the world. People are going to have to think a little more often about their U.S. tax situation. But what it really underscores, Jim, is where you started with this, that it is very, very clear to you. It's very, very clear to me. It's very, very clear to anybody who understands citizenship taxation that the only way to provide relief for Americans abroad in a permanent, meaningful way is pure RBT. No left outs, no carve outs, pure RBT for all.
That's where we stand. And as far as we can tell, John, this is, nobody needs to hit the panic button over this, especially coming up to the end of the year. As far as we can tell, this is in the Build Back Better bill. It's what the article says. We haven't found it exactly where it is in the bill, but as far as we know, that bill is now postponed into sometime next year. So I guess we got to follow this and see what happens if that bill reemerges and so forth. But in the meantime, you can't underscore it enough that this is why we've decided that, you know, that where we're going to stand from a policy standpoint as Republicans overseas is we're going to stand for pure RBT as a solution for Americans living abroad.
Well, Jim, you know, I think that is absolutely correct. But I also think for, you know, people listening to this, that like, I think that all the support should be for pure RBT and not supporting anything else.
Yeah,
And this is just one more example that shows the lunacy of, well, you know, we're going to keep CBT intact and just, you know, nibble around the edges and try to fix a few things. It cannot be fixed.
it can't
It
be.
simply cannot be fixed.
Yeah. Right. John, thanks so much for your expertise. This really
Thanks for the conversation.
underscores the, you know, in a very timely, we should have a breaking news thing at the bottom of this podcast here, you know, with some dramatic
Well,
music.
you know, it's
Because
either
this is only 2 days
or
old,
it's,
this
or it's
article.
breaking confirmation of the need for pure RBT,
That's right.
you know, or something like that. I mean, it's just crazy. And, you know, I think if people, the US tax system is so complex that it's comprehensible only to a select group of people who spend time really trying to learn it. I honestly think if people understood better how this thing works, they would not for a minute consider anything but pure RBT.
We'll keep making that point, John. Thanks so
Well,
much again, John, once again, and thanks everybody out there for watching.